Check out shares of Take-Two Interactive sinking in the after hours on earnings. Let's get to Josh Lipton with the details. Hey, Josh.
So, Melissa, remember heading into this report, the stock had rallied about 20% in the past 3 months, up more than 100% from its lows last March. As for the print, Q3 bookings, $814 million, a beat. Q4 bookings guidance, also a beat. On the call, CEO Strauss Zelnick talked about an incredibly strong holiday season. Results, he said, exceeded expectations. As for GTA 5 in 2020, more copies sold, he said, than in any year except 2013 when it first launched. NBA 2K21 pointed out net bookings grew 48%. Engagement there, he called incredibly strong. Analysts did ask the bigger question here about whether trends we're seeing in video games are sustainable. Strauss Zelnick saying post-pandemic demand will be higher than pre-pandemic. There's been a shift, he says, in favor of this kind of entertainment, but doesn't know if there's going to be some kind of fall off when people can once again enjoy live entertainment. I also did check in, though, with MKM's Eric Handler now to get his take on the results. Engagement in the stay-at-home environment, he says, is strong. Company's on pace for its third consecutive record year. Having said that, Eric is on the sidelines here, a neutral rating. The beat and bigger raise we saw here were not huge surprises, he says. And looking ahead, 2022 growth prospects, he argues, and the lack of visible catalysts are concerns. Melissa, back to you.
Josh, thank you. Josh Lipton, the stock is hitting after-hour session lows right now, down by 5.25%. It does strike me, and I'm not a gamer, and, full disclosure here, if it's not obvious to you already. But, Tim, it would seem to me that after the pandemic, people would just, by default, not have as much time to spend on games, period.
Yeah, but that's right. And I know, look, I know you're hooked on Grand Theft Auto and you just don't want to publicly admit it. And therefore, this is no. But look, I think you've pulled forward some demand. You've certainly had an audience that has been looking for something to do. But you also have trends and secular trends in terms of gaming, which are replacing linear TV and other forms of either online especially for the demographic that's focused on gaming. So I like valuations here. I think they're a little bit stretched, but at 35 times 22, this is, I think, a $230 stock. No problem. NBA 2K, disappointing, actually, those numbers, I think. I think the street was expecting closer to 65% growth on this. But I love this space, and I'm in it for the long haul.
Why the pullback, do you think, Guy? Was it the 20% run-up into the quarter in the past 3 months?
Yeah, it made an all-time high today, I think, 215 or so. So, I mean, I guess, Tim's point is right. I don't think it's expensive at 35 times, but maybe the market does. But by the way, this stock has sold off a number of times over the last year and a half on exactly those concerns, and those sell-offs have been short-lived. And the one number that Josh, who did a fabulous job, by the way, didn't mention was operating margins came in really strong at 21.3%. The street was in the low 18s. That speaks volumes, I think, in terms of how well the business is being run. So, you might see another day, too, of a sell-off in this name, but you can go back and look. This has happened before, and every single time, much like AMD, a couple weeks later, it's making new all-time highs. I think that's what we're going to see again with Take-Two.
Karen.
Yeah, I think that there might be a little bit of disappointment that Glue Mobile, which you remembered that I had 1 point owned, I don't now, that Take-Two has been missing out on some of the M&A that's been happening in the space.
Shepard Smith here. Thanks for watching CNBC on YouTube.